Vincent, it used to be very unusual for an oil stock to fall 4.5% in a day. Unfortunately for BP, it's become a little bit more regular over the last year and a half or so. Another big fall today. What's the problem this time?
Well, I think the problem this time is that BP keeps sending mixed messages to investors. One quarter it's doing fine, another quarter it's doing badly, yet another quarter it's sort of making provisions for left, right and centre. That's what this quarter is all about, really. It's not that anything unexpected was in the results. It's just that I think there was a sort of cumulative sigh from investors that, oh my God, we've forgotten about all these things and here they are. And
Are you saying that investors were expecting the write-down in the shale gas side?
Well, I think it was not unexpected, given that BG wrote down its part of its shale gas investment last week, and I think that there is more to come on that front across the industry, because the shale gas, the investment is enormous, the returns are nil just at the moment, given the low US national gas price. So there'll be more of that to come. And I think that it wasn't actually the shale gas thing that probably was the main feature of the BP results in that sense. It was more just I think the general sort of ragged view it gave of BP's operations just now.
And are you saying that they were kitchen sinking more than investors expected?
I think they were, actually. I mean, there was a lot of stuff. There was a big write-down on the downstream refining side as well, of about $2.7 billion. So there was a total write-down by BP in this quarter of about $5 billion. That looks quite high. There was also an operating profit decline of about 30%, for example. So, it was...
That's on the pure operations side.
Exactly,
so if you strip all those funnies out, how is the business looking like?
I mean, it's looking good and bad. I mean, this has been a dire quarter for oil companies anyway, and I think BP is probably the worst of them. But then it's in the worst shape. Strategically, it's neither here nor there. It has problems in Russia. It has the Gulf of Mexico hanging over it still, and there is the whole, because of its obsession with safety and maintenance now, it's shutting down for maintenance some of its highest margin assets in the Gulf of Mexico, North Sea, etc.
So it's being overly cautious.
So exactly, it's being excessively cautious.
But a lot of viewers would be surprised at the dire quarter given the oil price.
Exactly, but the oil price only works sort of when everything else is low. I mean, but a high oil price, it doesn't really have any impact on costs. I mean, costs just keep on rising relentlessly anyway. So I think a lot of it is offset by costs, actually.
And when we were here talking about BP in Russia, you were saying that BP was looking cheap. It must be looking cheaper for you now, then?
It is, but I mean, cheap on a sort of medium to long-term basis, because there are major questions that it has to address yet, including Russia and including the Gulf of Mexico. But I think that at some point BP will be a screaming buy. It looks like one now, but it's probably too early.
All right, so another mixed bag from BP. Thank you very much, Vincent.